Hello, everyone. Welcome back to yet another exciting session lined up for you. It gives me great joy to begin a trialogue on building a digital banking business. Welcoming our moderator, Mr. Miles, Managing Director Mamu. Now, I would like to welcome our speakers for this session, Mr. Yonker, co-founder and CEO Time Global, Mr. Greg, founder and CEO Tonic. I would like all the delegates to keep posting their questions in the chat box, and the panel will address a selected few at the end of this session. Over to you, Mr. Mike.
Thanks a lot. And welcome everybody to the Global FinTech Fest, and obviously the focus with FinTech with and beyond COVID. I think this is a great session, building a digital bank, with three very unique views and experiences on building a digital bank, both certainly in the current climate. Myself, working for Mambu, based in Singapore. Mambu is probably seen as one of the leaders in providing digital core banking capability to a lot of the digital banks that are launching in the market. And we're seeing a lot of momentum. So it's a really interesting time to be having this discussion. Now, I'd just like to hand off to my colleague Cohen, and just to introduce himself and give a bit of a background and an overview of Time and Time Global.
Thank you, Miles. At Time, we're a digital bank. We operate from Asia, but we have our first big deployment in Time Bank in South Africa. The first bank to get a banking license in South Africa in 17 years. We launched on Mambu, Miles, as you know. We launched on Mambu fully in the cloud 18 months ago in February last year. And this week, we're reaching 2 million customers. So I'm very excited to be getting to 2 million customers in a country of 50 million people in less than 18 months. And just a few weeks back, the Forbes 100 top banks came out, and we were voted the number 2 bank in the country by our customers, which I think is having the current banks sit up and take notice. Miles, I would say what is the unique element in Time Bank? I would say it's probably, in addition to what I've mentioned, our stack in the cloud and our technology approach, it's the way in which we integrate into the retail environment for customers. So we took as a challenge not just to be a niche digital bank with an app, but to actually go and integrate into retail stores, into physical retail, through kiosks where you can open a bank account in 3 to 5 minutes, and also integrate into cash registers and till point systems across the country to facilitate cash deposits and cash withdrawals. But I'm sure we'll talk a little bit more about that later.
Yeah, it's a great story, Colin, and I mean, obviously the penetration you've had in an 18-month period is quite incredible. It's great. Now I'd like Greg to introduce himself, and he's got just as an exciting story, but not quite at the sort of same evolution as Colin, but is going to get there in a short time frame.
Thank you very much, Miles, and thanks very much to the organizers for having us on the show. I'm the CEO and founder of Tonic Bank. Tonic is the first retail neobank in Southeast Asia to have received a bank license from a regulator. It's in the Philippines. We're operating actually out of a few places currently, with the 3 main hubs being Philippines, Singapore, and Chennai, India, where we do most of the R&D. We are not operating on Mambu, but on one of Mambu's competitors, but also fully in the cloud. We're preparing for launch. Our target launch date is in Q4 this year. Again, we'll be launching in the Philippines market on the basis of our own bank license, targeting retail customers, mainstream mid-market consumers in the Philippines, who are deeply unsatisfied with the existing banking proposition. So very much hoping that we're going to be able to achieve maybe something comparable to what our esteemed colleagues have achieved in South Africa.
Great. And it's so I think for the audience, it's great that you guys have two very different perspectives. Someone who's right in the middle of deploying a digital bank, and someone who's been there for a period of time. So going to give us a really good perspective. So look, let's just cut to it, and I think let's get some questions involved that are really pertinent to what's going on right now. And obviously one of the topics of the festival is the impact that COVID-19 is having on banking, and obviously the impact it's had on digital banking. So first question I'll ask to you, Colin, if you're okay, is first and foremost, in line with the festival, as I said earlier, how are you and the company dealing and navigating with what I guess we're calling the new normal, and no one's really sure what that is right now.
Yeah, Miles, I saw a poster the other day. It said, if you're not stressed at a time like this, you don't understand the situation. This is absolutely extraordinary times, and I would say it's maybe focusing in two areas. The one area is operationally, how's the business sort of gone in the COVID time. Now South Africa has had very extreme lockdown in this time, and being a digital bank has actually been phenomenal. From a number of perspectives. The one is we're the only bank that continued to grow throughout the lockdown, down at the pace of over 100,000 customers a month. We can see the national banking stats from all the banks at the central bank, and the other banks have not grown in this time. And that's a function of two things. The first is the online aspect, but the second was the fact that we're in retail stores and people still go out and shop. 98% of commerce in South Africa is still done offline. And so when they go into the retail store to buy their groceries, there's something there that can help them with their banking, as opposed to having to go into a branch. So I think, operationally we've done well. Of course, being in the cloud, being set up the way we are, we almost did not miss a beat going from the office to working at home. And it's phenomenal how the team has settled into working from home, how productive we've been. And in some areas like data analytics and the programmers and the engineers, they reckon they are more productive now than they were when they came into the office. What's been the toughest part? The toughest part has been access to capital. Yeah. And I think it's going to remain tough. What we see is a very clear shift in investors' requirements from digital banks, from being impatient for growth and scale to being impatient for profitability. And so there's no doubt that the risk profile has changed. The cycle is at a point where they no longer ask me, how big are you going to be? They ask me, how soon are you going to be profitable? And I think that's a theme that we all have to be ready for and think very clearly on when we look at our revenue strategies as digital banks.
And maybe an extension for you on that, for you, Greg, is that how, as you're right in the midst of deploying a digital bank, how have you had to navigate this as well? What sort of impact has it had on you and the company through the period where you're actually, developing, building, and creating what your bank's going to look like?
Yeah, thanks for that. That's a great question. So for us, our revenue strategy, or our, let's say, product strategy, is standing on three legs, which is the normal three legs of the banking business. You have the retail deposits, you have the retail current accounts, and you have the retail loans. So that's a classical three legs of the bank proposition. Within that, our business plan originally had us very much focused on term deposits and savings and lending. I'm a career consumer finance guy. I've been doing that for quite some time, so it comes a little bit with my legacy as well. But that's also part of the logic for our development, driven by the fact that monetization in emerging market environment is easier through the lending proposition. So we've kind of started out with that, and that's what our MVP has been built to, with fairly limited number of functions on the payment side of the business. Because we figured, okay, as long as we can have a good savings proposition, and we have a lot of product bells and whistles around that, and a good lending proposition, we should do well just as an asset liability balancer, and generate nice ROEs. A great example of that for me continues to remain Tinkoff Bank in Russia. Been watching and following these guys for a very long time. I was actually competing in the same space in consumer finance in the CIS, where I previously built and sold a bank in Ukraine. So they generated over 70% ROE last year. I think what New Bank in Brazil is doing is also very inspirational. Having said that, that all has gone up the air a little bit with the environment because the risk profile, of course, has changed. So we're looking at rebalancing our lending proposition to move it into more secured places where we can kind of structurally mitigate some of the credit risks. And at the same time, we're seeing this huge uptick in demand for payments for the consumers. So we feel that in order for us to really have an efficient CAC and be able to bring customers on board, we need to do more on the payment side. So we've had to rebalance the proposition, and it's been interesting and quite challenging, also working remotely. We don't have the advantage of having onboarded the team 2 years ago. So it's a fresh team. So for us, I think getting the team laterally functional across what right now is actually 9 jurisdictions is a bit of a challenge. But having fun with that, and I think we're on good track to achieve our launch in Q4.
Has you felt that it's impacted you from a timeline perspective, like the slowdown, everyone working remotely, video conferencing? Do you feel you haven't been able to continue to go with the plan you wanted to? Have you had to pivot in how you actually are going to go to market, etc. as well? Have you had that sort of impact?
Yeah, it's definitely impacted our timeline. I wouldn't say it was so much the work from home thing as it was the physical lockdown in Manila. Our biggest two challenges, and Manila has gone through a very severe lockdown, just like South Africa. So actually, the regulator was shut down for almost 2 months, and we couldn't progress our bank registration papers.
Oh, wow.
Because of that. Another thing is that one of the requirements for us to launch is actually to have a bank head office in Manila, a physical location, which the regulator, despite the fact that they're giving us something very unique of a digital bank type license, they still said, hey, you still need to have a headquarters. Now, if I can't get construction crews to the site, that's a challenge, right? So those I think that have been the two main delays for us. Actually, on the product side, we have been progressing quite nicely. So.
Oh, great. Okay, that's good. All right, question, Colin, for you. So given your business is built and fully born in the cloud, has there been any impact, positive or negative, to your business? And probably the key thing is, have you seen a shift in consumer behavior? Like, how are your customers behaving as well?
Miles, in the cloud, it's very interesting. The cloud has turned out to be extremely powerful for us, not just from a cost management perspective, the ability to scale seamlessly, but also from the perspective of how we were able to sort of evolve our teams. We now, at 2 million customers, actually have about 80 people less in the business than we did when we launched.
Oh, wow.
And we would never have been able to do that if it wasn't for this specific, not just the cloud, but the technology architecture that we have on the cloud. I think the other thing that I'll mention that I think is very powerful that people often miss is the data tools that we have available to us on the cloud. So we are able now to do things with data that having worked for a big bank, in my previous life, we wouldn't have dreamt of doing. And if we thought we would do it, it would have taken us weeks and months to do it. And that information is right now at our fingertips. So the cloud has really worked well for us. And I have no doubt that, increasingly, it will become the standard to run banking from the cloud. Even from a data security perspective and a cybersecurity perspective, I think that clearly is going to become the standard. I think from a behavioral perspective, it's interesting. I think there's a yin and yang that we see. The one is we've clearly seen the digital channels getting a lot of attention and people are going more digital. But I think we must be careful not to be overly sort of simplistic about it, because what we also see is that people really long for human contact. We see it in the calls we get at the call center, people phoning to actually have a chat. We see in our ambassadors that they man our kiosks in the shops. There's also this real need for human contact, which I think that our challenge as digital players is to say, how do you do that? How do you give somebody a human experience without the cost of a branch and tellers and all of that stuff? And I think it's really doable, but I don't think we must forget that other side of it, which is this need for connection.
Yeah, it's very interesting. Anything to add on that one, Greg?
Oh, we're also deploying fully in the cloud, and of course, we're not at a point where we can take the same advantage of the data analytics yet. But I would echo the issue of the need for human contact. Also, having come from more traditional banking, where we were very much an offline operation in emerging Europe. I would say that especially the mass market client, being even as heavily digital as the Filipino consumers are, with average age of 24 and 4 hours of Facebook per day, there's still that need. And when you're appealing to the liability side product, the deposit, that just magnifies that need for human contact. Keeping money in the cloud and being able to call somebody and talk to somebody. So we're looking at building that, and that means that the zero ops type of approach that is espoused by a lot of the guys in developed markets, for example. I'm not sure I buy that. I don't think that will really fly in an earlier stage emerging market. Where people still want to talk to people. So, yeah, it's a mixture of the two that we're also trying to deliver.
All right, very good. Question to you, Colin, as well now. So, do you have any words of advice that people who are looking to transform their businesses? And actually, you can both answer this, given you both sort of are really first movers and moving to this sort of more flexible, more agile approach to a banking system and providing services. What are some do's and don'ts? What are some learns that you've had in the past sort of 2 years, Colin? And then Greg, some learns that maybe you've had in the past 6 months. What would be some advice that you would potentially give some people that are looking to transform their business?
Miles, you're going to have to stop us. I think we can keep going and going and going on this one. So I'll try to sort of pick the ones that I think for me is sort of at the heart of it. I think the first thing I will say is it's much easier to start fresh than to transform what you have. There's always this idea that we have systems, we've got processes and so on, we'll just sort of add on to it and we evolve from where we are. It's a dog's breakfast. Don't do it. Start fresh. Start on the side.
We at Mambu call that putting lipstick on the pig.
Yeah, exactly. It's not pretty. It's not pretty. It's expensive. It takes you a long time. I think the second thing is build the business for rapid evolution. We have done more bank building. Greg, I feel bad to say this, but I think you already know this. We have done more bank building since we've launched than we did before we launched. We probably do 3 to 5 code drops per day, every day. I came from a world where you had like these big code drops going in 4 times a year. Like every quarter, there's like this big night where all the techies stay up and they're going to put new code in production. We've put 4 times a day, we put new code in production. And that is the fitness you have to build in your teams from a technology perspective, because once you're out there, your customers are coming at you. They're coming at you all the time and they want new things. They want different things. There are things that you thought you didn't need that you need. And there are things that you've built with great effort that nobody's interested in. And that's just the nature of it. And the last point I will make is I think that people underestimate when you're building a digital bank how narrow your margin for error is in terms of systems resilience, uptime, reliability. And specifically, Greg, to your point about deposit taking. It's one thing to give somebody a loan and there's a glitch and the loan comes a bit later or whatever. When I've got your money, there is no margin for error. And people care about it. And they care about, especially in emerging markets, they care about every cent. They follow every cent. And so, being completely obsessed with uptime, resilience, scalability is the right obsession. Because I've seen the few times where we stumbled on that, the impact is massive.
Greg?
Colin, thank you for the pointers. Fantastic pointers. It's going to save us a lot of time and money, hopefully. So thanks. Yeah, look, I'm. This is a 5th fintech that I've co-founded. So I've been kind of serially co-founding fintechs in the consumer lending space in Southeast Asia for the last few years. And if there's one word of advice, and I think it's kind of what underpins that issue of, okay, it's better to start afresh than to try to put the proverbial lipstick on the proverbial animal. It's basically the issue is culture. Culture is strategy for breakfast, lunch, and dinner. You're going to pivot your strategy 50,000 times. And Cohen, I really love what you just said about, once you get out there and your customers are actually giving you feedback, you just got to run, stop, run, and pivot really fast. And if you don't have a team with you that is cohesive and that is able to do that, and you've built that team from scratch with those types of values, then it's going to be super hard. So I'm actually spending an enormous amount of time on the issues of culture as we onboard people now, trying to make sure that at all levels of the organization, that it's really, all the right values are in there. And, out of our 5 core values, one happens to be good sense of humor.
Yeah.
Traditional banking value, right? But when you're pivoting all the time like this, you gotta have people that can have some distance towards themselves and their opinions, and are able to laugh at the world and just take things as they come. So that's culture.
Yeah, and I'd actually like to add to that. When we actually talk to organisations and they are either established or new, it's actually never a technical conversation when we start talking about Mambu. It's actually cultural, because the way we deploy composable banking, bringing bits of Lego together to create the stack you want, is so foreign to someone that's come from a traditional bank with a big end-to-end system and hundreds of developers, etc. So, we actually find quite often that they're actually just not culturally ready to actually go and start thinking like a digital bank, or thinking what next generation technology is going to be for them. So I support your comment 100%. Culture is one of the biggest things that everybody needs to be aware of getting into this.
You make a very important point there about all the different Lego pieces, putting them together. The other thing I'd say to people, really understand where you want to differentiate, and don't waste any time building the stuff where you don't need to differentiate. We're now at a point where there's almost for every part of your tech stack something out there that is good enough to do the day job. Where you need to focus is, what are the special things? What is that extra 5%, 10% of value that I want to create for the customer? If it's on the front end, if it's experience that you're driving, then that's where you put your effort. If it's open APIs, that's where you put your effort. But clarity on your differentiation and not wasting time building the other stuff is very important. And to your point, that means having the right architect and the right CIO. And you want people to be functionally, you want them to be functionally lazy. You don't want them to be people who love building everything themselves.
Yeah. So next question, and so on this, do you see the traditional financial institutions with legacy cumbersome banking systems failing, soon to fail, and why? So I'm actually going to answer this one first, because this is right in my wheelhouse. So I think it's a little bit further to some of the things that we've reiterated before, is that a lot of the existing financial institutions, and Cohen made the point earlier, have not really paid attention to the digital banks and the challenges and the new guys. They thought they were too small, they weren't going to be effective, they couldn't possibly compete on value proposition and branding or price, etc. But Cohen, as you said, number 2 ranked after 18 months in what's happening in South Africa. So what we've really seen in the market most recently is the big banks, they either have to get on this bandwagon and support it, and they have to have a different approach to how the standalone digital banks are spinning up, or they're not going to stay relevant. They're not actually going to be capable in the market. You look at the penetration that some of the lifestyle apps, the Grabs of the world, what they're doing now and how they're engaging with their customers. If those guys start offering more, they've got a captured audience, start offering financial services, micro lending, savings and transactional wallet type services, those customers will become loyal and the big banks will just get left behind. So one of the things we have seen is, and we've seen it quite successfully in Europe, and we're starting to see it here in Asia, is what a lot of the big banks are doing are spinning up their own digital brands. And they're actually doing what Greg and Cohen said is they're actually, and we at Manberg call launch a speedboat from a cruise ship. So they're basically spinning up this little brand new tech stack. They MVP a new product targeting a particular demographic or a particular part of the market, and they go after it without trying to get caught up in the years of process and framework and manual intervention and legacy technology that they have in the big banks. So we are seeing a bit of a shift with some of the more established banks that have realized they have to do something. But that being said, we're seeing a lot of banks still plod along. They think about it, but then they'll say, "I'll just keep putting lipstick on the pig." And honestly, it's the truth. It's quite interesting to really see the different dynamic and the behavior. And back to Greg's point, at the end of the day, it fundamentally comes down to culture. They are not culturally ready to get, jump off the big ship and jump into a rowboat. Happy for you guys to add some color to those comments.
Colin, go ahead.
I like the speedboat analogy, Miles. What I'd say is the key for the big banks, and I've mates who trying to do this, these speedboats, launch these speedboats. You cannot load the whole crew of the mothership into the speedboat and think it's going to go fast.
Yeah.
You can't say, here's a speedboat for you, and with it, here's an army of risk people, here's an army of compliance people, here's an army of internal auditors who will check your every step, and now go and have fun and compete with other guys. So I think that even if a business comes to this point where they're willing to launch the speedboat, the governance around it, setting it up for success and setting it up for agility is absolutely key. And then actually you can have the best of both worlds. You can actually have a world where you have all the resources of the big bank and all the agility of a startup. But there's one other ingredient for me. Greg, I love speaking to serial startup guys, because the one thing that is sort of like a missing ingredient if you're in the comfort of a big corporate is the survival anxiety, is the existential angst that comes with starting something new, that if you don't have momentum, there's nothing. If you don't go to work today, it's not like there's something will keep going. Nothing will happen if you don't push it. And I don't know yet how we inject that survival instinct, that existential angst that is so necessary to just keep going no matter how tough it is. How do you inject that into the big corporates? And I think there are ways to do it, but I haven't really seen anyone crack that.
Yeah, I think that's a great point, Colin. It's culture, right? And for me, it's the issue of big banks versus startup neobanks. It's mathematical. A global ROE on banking sector last year before COVID hit was 11 point something percent. As I mentioned to you guys, Tinkoff, which is the mature neobank model with proper asset liability strategy and not just a payment strategy. These guys are at 70% ROE. How does that happen? And they're number 2 player in credit cards in Russia now. How does that happen, right? Very simple. They're building into the whole value chain from origination, risk, servicing, collections, funding. The whole value chain is built on a completely different cost structure than the cost structure of a traditional bank. So for a traditional bank, I don't think it's an issue of, hey, we can digitally transform yada, yada, yada incrementally. Yeah, I mean, if you ain't got the speedboat, and if that speedboat ain't developing into a cruise ship as it sails alone, and then ultimately, like everybody, like who can move to the cruise ship, moves to the cruise ship, and the rest people just sink, right? That's kind of what has to happen over time, right? And so the only guys that will survive, I think, Miles, is just as you said. It's the guys that are building the speedboat and preparing for that speedboat to grow into the cruise ship.
Yep.
And everybody else is just gonna go the way of the dinosaur.
Yeah, it's really it's quite an interesting dynamic, and you're exactly right. Yeah, they've got to be prepared to throttle that speedboat and let it grow. They can't just let it go off on its own. So yeah, it's a really interesting analogy we use. Okay, so I've got one last formal question, and we've got a couple of good ones from the audience as well, which I'll throw out there. But I guess last but not least, from my perspective, what are your views on how things are heading in Asia Pacific? How do you think the economies are looking? How are people? Obviously, some economies are reopening a little bit off the back of COVID, the new normal, as we want to call it. But both of you, from your perspectives, you're both very active in this market. What's your view on how APAC as a region is going, and what do you think where the economies are sitting right now?
Greg, why don't you go first? Give me time to think about this one.
Sure. Look, I love Southeast Asia and APAC in general for one simple reason. There's this huge population that is very young and with very positive demographics underlying that youth, which will mean that it will continue staying young for some time. That population is very digitally native, and being digitally native is a secular driver of efficiency. And so basically what we're seeing is that, if in the past few centuries, we've kind of seen the colonial and then post-colonial and neo-colonial structures, really keeping countries at various speeds of development, then, technology is equalizing. And especially this work from home. We've been onboarding people from all over the world in the last few months. I've stopped caring where people are based.
Yeah.
We've onboarded, for example, a whole team of UX UI out of East Europe. And okay, they work some crazy hours in their time zone, but that's life, but because we could find them there and we onboarded them there. And the wage they're getting is, we're comping against the wage in Singapore, for example. You basically see that, this whole middle class evolution that is driven by the technological development, it's a secular trend that's going to drive a lot of growth here because the population is young and the technology is democratized. So everybody now has access to it. Everybody's got their smartphone. Everybody's got internet. So I just think that I love that middle class trend. And I love for us to continue riding that middle class trend. I think the GDP growth here in the region, unlike in the past where you had to build factories and stuff, it's pure economic efficiency of the individuals. And as long as these individuals are able to take a step function in their efficiency, you're going to see a massive evolution of the middle class and massive evolution of the economies, COVID or no COVID. So that's what I really love about the region. And then Philippines, is a great example of that. 100 million population, average age 24, super digitally native. So loving it and looking forward to serving that.
The sweet spot.
Yeah, Greg, beautifully put. Beautifully put. It's such an exciting place to be right now, and it's a place that is because it really truly operates as a complex system, with a lot of freedom and a lot of influence, both cultural and technological influence in these countries. I think it's also a very resilient part of the world. It's a part of the world that is responding and will respond to the challenges of COVID. The one thing we now know in Hong Kong, don't think it's over. When you think it's over, it's not over. There's another round coming, and there's possibly another round coming, and there's possibly another round coming, and it's fundamentally unpredictable. But there is great resilience in the system against it. And I think our challenge as bankers and as digital bankers is not to get too attached about the game plans that made us successful in a different world. To be very, very aware of how behaviors, sentiment, priorities, and so on are shifting. And the people who read this best and who respond to it best can become very big winners out of it. But ultimately, it's that compassion, passion for the customer, closeness to the customer, being able to, listening, learning constantly from these changes that will determine in our industry and all other industries, I think, consumer-facing industries, who are going to be the winners and the losers.
Okay. Five more minutes. So I'm going to fire off a couple of quick questions from the audience. This is to both of you. What sets apart a digital banking business from a traditional bank? And you have to limit your answer to less than 20 words, Cohen.
I think at the simplest level, if you have no branches, you have no tellers, you're a digital bank. But I think the fundamental capabilities that set it aside are actually the technology stack, how that works, the fact that you're operating without legacy. It's your data and analytics capability that is fundamentally different because you're legacy free. And then it's the focus on customer experience. I don't think there's a single digital bank that will not have in its top 2 or 3 priorities having a unique, exciting, and compelling customer experience for the customer. And sort of, without getting too academic about the definition, I think those are the things in my mind that define digital banking.
Greg?
I would echo that, except maybe the order and the branches and the physical infrastructure, to me, is even a little secondary to the philosophy of how you build your business, because banks have stopped caring about what the customer wants. The marketing teams inside banks and the product teams inside banks, they have stopped having an ability to drive innovation because there are too many committees. And, when ops and compliance get together, they will kill any proposition. So what you end up in the product department is with the people, who are kind of sitting there going, oh, well, I'm not going to be able to do anything about it anyway. So might as well just bow to the risk guys and, have a good relationship and have tea with them. So that, to me, is the core. That's what we're very much hoping will be our core once we launch and post we launch, is caring deeply about the customer, listening to the customer, and delivering to the customer what he wants. It's not complicated. When you deliver to the customer what he wants, you will succeed. You just need to know what that is, right? So that's what we hope to do.
All right, one quick question. This will be the last one. Do you feel, and both of you, probably Greg, answer this one first if you're okay. Do you feel any challenges for banks or fintech partnerships, especially from a regulatory perspective in general? And I think probably just to add that from my perspective, I mean, traditionally the regulators have been very anti-cloud, they've been very anti-fintech, but we've definitely seen a change in the regulator behavior in the past 12 to 18 months. From your perspective, what do you think there are challenges for people who are either want to go digital or are in it or about to build a digital bank from a regulatory perspective?
For us, we've been very lucky to find a very, very understanding partner in the Banco Central in the Philippines. They're very, very advanced as a regulator, probably on a global scale, in understanding that, okay, we have a financial inclusion problem. 70% of Filipinos are outside of the system. To drive economic growth, we need to solve that, and digital is the only way that we can solve it. So it's a very refreshing dialogue. And we've been able to lock in that partnership with them and move forward kind of as a unique sandbox proposition where they enabled us to operate a digital business on the back of a rural bank license. And we're helping them define the digital bank framework, which then, us and the other guys like us will be grandfathered into. But we think definitely the regulators around the world are waking up to this. I think in some of the domains, there's probably a little more regulation required, but also, we've seen, for example, Indonesia, Philippines, and now in Vietnam, quite a lot of regulatory action around digital lending, where some of the guys coming into the market have been doing fairly unsavory collection practices, etc., or credit scoring practices, and all that has to be cleaned up. So you do need some basic frameworks, but I'm glad to see that regulators are moving in the right direction.
Yep. Colin, just to add, anything you want to add to that?
I just say, Miles, I'd just say Greg exactly now personified the attitude that I think is a winning attitude with regulators. Treat them as a partner. If you are one of the good guys, they want the same thing as you.
Yeah, and it's interesting. I mean, we have quite a big geographical footprint. Mambu operates in 62 countries currently, and with about 300 deployments. So we see a lot of what's going on, and I think really There are still some stragglers, but we are seeing on the whole most regulators even in the most traditional markets like Indonesia is a really good example. They are really opening up to the fact that they need to be more supportive of cloud and different types of technology. So it's great. Gentlemen, our time is up. I'd like to say thank you very much for joining me today. I think it was some great questions. Hopefully the audience enjoyed them. And I think the organizers done a great job. So thank you very much.
Thank you,
everyone.
guys. It was an honor to be on the panel with you. Thanks.
Great. Thank you so much.
Thank you, speakers, for being here with today and making this discussion possible. Another thanks to our delegates. Please stay tuned for more such conversations. Have an amazing day.